Hello, everyone. Welcome to the FTX podcast. Really glad to have here with me today Arthur Cheong, the founder of Defiance Capital. Welcome, man.
Hey, thanks for having me. This is Arthur here.
Yeah, it's a total pleasure. Would you mind kicking this off by giving an introduction of yourself and Defiance and all things that you find interesting?
Sure. I'm the founder of Defiance Capital, a DeFi-focused asset fund. Defiance Capital is one of the most active DeFi investor in the space. What you focus on the fundamental side of the crypto asset and combine it with an active investment approach. So this is two of our main investment philosophy. We believe in being active, and we believe in really investing through the fundamentals of the project. So a little bit about myself. I started in the space since 2018. I quit my full-time job back in the oil trading space to embrace crypto full-time. And I did a bunch of different jobs in crypto. I started my own crypto research startup. And I also worked for Zilliqa, a layer 1 blockchain, for a short while. But most of the time I've been just investing and just trying to understand more about crypto. And I think this is really how I lead me to start Defiance Capital, because I think after 2 years of soul searching in crypto, I built my conviction that finance is the biggest use case for permissionless blockchain, and which lead to the birth of DeFi. So I've been there since the very beginning. I think that if there's one use case that really can take off on blockchain right now, it has to be financial use cases, because Bitcoin built the foundation as the decentralized money, and we will build the entire financial stack to complement Bitcoin and grow it from here as well. So that's how Defiance Capital got started. So we're also one of the earliest and biggest investors in some of the major DeFi protocols, such as Synthetics, Aave, and other stuff as well. Yep.
Cool. So you've been looking at these projects for a while before this recent boom sort of happened in the DeFi summer, right?
Yes, correct. Yeah. So we've been investing in DeFi since early 2019. I would say actually that Synthetics, we made the investment in late 2018. Yeah.
Nice. Very good call. Very prescient of you. So congratulations.
Yep.
I wanted to ask you a little bit about, I understand you come from the trading space, so some things must have been clear, but I'd like to know a bit what your thought process was when you looked at these very early projects that back then, I mean, I looked at a lot of these DeFi projects when they were starting, and it was hard to tell that they were going to achieve what they've achieved now. So I'd love to know a little bit of the rhetoric that went into your thinking there.
Yeah, so I think there's no secret formula, but there's usually a few factors that kind of is a good sign of the future success or the resilience of this specific DeFi protocol. So I think that some of my biggest win had come from the fact that a lot of these DeFi protocols are not new. They were actually raised and their ICO back in 2017 or 2018. They actually went through a two-year very brutal bear market where a lot of other teams have gave up and just throw in the towel. But I think that what made this team stand out is that the team never give up, and they will always be there, come out with the next version of product to tackle any potential problem they see in the market. So I think this is one thing, that the team's resilience and the mental fortitude to really survive through the bear market and just never give up. I think this is already one very major factor. I think the second factor is you can kind of see some early traction. So I think that there's some fine line there. You want to be early, but not too early. I think that obviously depends on the profile. I'm kind of like the early but not too early crowd. Like a lot of time when I invest in something, I kind of want to see some early sign of traction and some of the early usage experience. So I generally prefer to invest when the product is already out, where I can really use and try it out for myself. So I think this is where the active part really comes in. So if you are a user yourself, you tend to be have a very strong understanding of what you're investing as well. So I think this is pretty, right now, I think it's not that unique anymore, because everyone is an ape right now. And you have so many user just come into a DeFi protocol the first day they were launched. But I think back in 1 year ago, it was quite rare, because a lot of people were still very skeptical of DeFi. Is it safe? Is it just a hobby stuff? And that, I think at that moment, by being a power user of DeFi protocol, really give you a lot of insight and how this is valuable and how big this can get as well. Yeah, so I think that I was quite fortunate to be quite early into this wave. Yeah, so I really use it and really understand the potential of this. Yeah.
Yeah, that makes total sense to me. And I wholeheartedly agree with you that a big part of this isn't just having the perfect formula at the beginning. It's just the tenacity to not give up and keep working, keep working, keep working, and pivot
Yeah.
when they have to and find the problems.
Yeah, and I think another sign is usually I don't think it's 100%, but usually a good prediction of the future success is like the attention they pay to the community. Yeah, so I'm not saying that paying the community to do some random like meme or what, but it's just like constantly communicating with them, understanding what they really want, what's their demand, and incorporating that into the future or some of the complaints and the unhappiness of the community. You try to address it in as much as possible. So I think one of the example I can give is like synthetics. They used to have a front running issue for a while, and how they solve this is to do a retroactive distribution of more SNX to everyone that was affected. So I think this is like not so I would say it's a good gesture that shows that they do care about the community. And they always like work with the community and take into account the community's view to incorporate many different features as well. And in fact, right now, after the recent governance, you can see that Synthetics is really largely community run right now. The founder Kane actually have stepped down from the council, which vote for the important decision of the protocol right now. Yeah.
Yeah. No, yeah, I totally agree. And I'd like to know sort of what are some signs for you when you're investigating a project of an active community? What are things that kind of light the interest for you when you see them?
I think the first is a lot of the active intellectual discussion. I think that especially when the project is earlier on, there are usually a few big brain that in the project that really passionate and excited about, and always just discuss about the various different aspects and explore probably some of the minor aspects that that's not often talked about. It's just like I'll give you one example, the more prominent one, like when Bitcoin at the extremely early days, like Hal Finney, he actually like probably like extrapolate that how much Bitcoin can be worth in future. And the way he uses like, okay, if Bitcoin can become like a 10 or 20% of the global money supply, this is how much Bitcoin can be worth. So I think you always and you can see a lot of this kind of like discussion about like the certain crypto economics part of the DeFi protocol, or certain like a product part that you see the potential that it can be expanded further. So when you see a lot of this kind of potential, it's not only about Moon Lambo. I mean, if there's too excessive, this talk is usually not that good. I mean, usually it's about balance, but if you see a lot of intellectual discussion on how this project can grow beyond the next stage, and there's a lot of smart people participating in this discussion, this is usually a good sign.
Yeah, I totally agree. And then to pivot it back a little bit more to Defiance, I'd love to know kind of when you came to the moment that you said, okay, I need to formalize this, because I assume initially you were investing personally. What was the moment that made you decide, all right, I'm going to start a fund and this is what I'm doing going forward?
Yeah, so this is actually an interesting story. I started a little bit more informally. I helped to manage friends and family money like since 2018, and it has done very well. So I mean, the return, it might sound bizarre, but it starts from a very low base. So we did around 80 times of return over the last 2 years, starting from like a low base of 6 figures. So and so the return was really good. And I was thinking that I probably should formalize it into like a proper fund at this stage. And I met like Carl and Sue from Three Arrows Capital, and with their help and backing, I just managed to launch this fund in a formal way this year.
Sweet. So this was launched in 2020?
Yes, correct. Defiance was officially launched in 2020.
Got it. And what was your first like exciting investment with Defiance? What did it feel? I guess my question, did it feel different investing as Defiance versus investing personally, or is it just the same thing with an entity in between?
I think the difference is more optic. I mean, there are some, like obviously that I think that especially when you're making some primary investment, there are some project that they will want more of the funds involvement because they are more structural in nature, and they can provide more help in a more structural manner. But I think it's mostly optic. I mean, there are some angels who are very helpful and can provide and add a lot of value as well. So I think that the changes are really more optic in nature. Yeah.
Mm-hmm. Yeah, that's the
Yep.
feedback I've gotten from people that know you as well, is that you're a pretty active participant in a lot of these communities and kind of talking with the team and stuff. And I think that's kind of what these projects really need, because a lot of the investors in crypto are sort of just like, let's throw money at this and see what happens, rather than the activist investor approach. And that kind of goes into my next question. And it's what makes you an activist investor rather than, say, a gains focused investor?
I think that it's just the difference mainly come from our proactiveness and our involvement in how the DeFi protocol operate. We usually get pretty involved in the governance, in giving product feedback, and also like to help them refine and in some time to revamp the token economic design. So I think that, for example, like Kyber in the early days, they were pretty successful, I would say, in terms of the product. I mean, they went through the bear market, and the volume has been picking up on the decentralized exchange. And in fact, at one point of time, their volume actually goes toe to toe with Uniswap. I mean, right now the gap have widened a lot, but back in late 2019, it was actually quite similar. And I think, but they do suffer from the old token economic design of like it's a pure payment token, like nobody really actually need to use like a Kyber network to pay for anything, or it's just a pure burning of the fee. So we gave them a lot of feedback, and they finally launched a token governance upgrade, and which give that token a proper value accrual. So I think that is a big difference, and the token itself appreciated a lot over the early 2020. So I think that this is some of our involvement. A lot of the investors, when they invest, they just tend to sit passively and just wait for the token to go up, and they don't really get too in touch with the team. I think obviously that a lot of team and investors would like to say that they are active in a way, but you talk to the team, you kind of know that who is really active. Yeah, so I think that's one of the major involvement, and it's definitely not easy because it's very time consuming to engage in all this active campaign, I would say.
Yeah, I was going to ask, how do you find that time balance between sort of giving the aid you think these companies need and direction, and then also focusing on your fund and your personal work?
I would say at an early stage, it's definitely come from concentration. So I think for the most part of 2019 to early 2020, the fund doesn't really have more than like 5 positions. So we are able to concentrate our attention and resource on our best idea. But obviously right now we invested a lot more, and the team have also expanded. So right now I have 2 very talented analysts helping me as well. So that kind of expanded our capacity a lot more. And we also trying to do it in a more structural manner. It's just like to consolidate our process, to streamline the workflow, to make it possible. But it's definitely still a very challenging task. Yep. But I think that also at a certain stage, right, the more mature DeFi protocol also will need less of our help in the more. I mean, we still talk to them very closely, but just like, for example, you at FTX, I mean, the help that FTX need at the early stage and the help that FTX need at the current stage is obviously very different. So I think that our help is kind of like the value we add is kind of like a little bit different compared to the early stage protocol and later stage protocol right now. Yeah.
Mm-hmm. Yeah, that makes perfect sense. And so then would the thesis of Defiance Capital basically be that finance will find its place on the blockchain, and that's the direction you're taking, or what would you say it is?
I think that's the key thesis for almost exclusively investing in DeFi. So when you look at Defiance Capital, there's only one non-DeFi investment we have, which is Axie Infinity. It's an NFT game that's just launched on Binance IEO recently. So I think that because I think I'm the guy that went through the ICO bubble, and during the ICO bubble, you see all sorts of crazy ideas being experimented on the blockchain, and none of it have succeeded except for finance. So I think that this is just natural conclusion that finance is the best use case for blockchain right now. So I think there's really no reason to invest in other stuff. I mean, obviously you can invest in other layer 1 protocol, but to us that layer 1 protocol is a little bit harder to value and justify that. I mean, you can say that this layer 1 protocol can be worth 10 billion. I mean, Filecoin is worth like what? I think 50 billion fully diluted. And while like certain like very promising like Solana is still worth around I think 1 or 2 billion. You see a very wide divergence of valuation, and it's a bit hard to justify why there's such a big gap in the valuation. I think, but for a lot of DeFi protocol, one very good thing is a lot of them have certain way of calculating the earnings, although that they might not have formalized their value accrual model yet, but you can kind of approximate some of the value accrual and come up with a reasonable range of valuation combined with their current growth rate. So it's quite similar to how like a capital market investor evaluate their like a cash flow accruing asset like stocks and bond. So I think this is one of the things that give us a lot more margin of safety and confidence on the valuation we are investing in as well.
Yeah, I totally agree. And a long time ago, I did an interview when DeFi summer was starting with Angelo from Atomic Blue. I don't know if you know those guys.
Yes.
And he was saying the exact same thing. It's like basically finally here you have crypto projects that you can model more faithfully comparatively to any of the ones that were there before. So it allows guys like you that know how to model to do potentially, it's always crypto, but quote unquote safer investments. Real quick, a tangent before I ask you kind of sort of your pillars of investment is going on to blockchain gaming, because I know that, one of your main theses there is that, finance is the main player, but you also invested in Axie Infinity. And I'm also really bullish on blockchain gaming. I think, either for Ethereum, obviously you're going to need some really good L2 solutions, or ETH 2.0 is going to have to work, or some of these other blockchains will be able to incorporate it. But, I played a lot of RuneScape growing up. And I've always thought that a game like that touched with the aspect of permanence of objects that you can trade with others for real world money would be huge. So I'd love to hear a bit what you think of when you think of blockchain gaming.
Yeah, I think that blockchain gaming is still very early, but I definitely see the potential. I think that I've been a gamer since very young age, and I can see the need for the like a community ownership in a gaming space. And unfortunately, right now, I think that it's still quite centralized. I mean, when a certain very popular game closed down, all the players lose their community and their asset. And that's why that in a certain popular game, you always see some private server popping up where it's just purely run by the gamers. But always, I think that it always runs into a scale problem. I mean, who's gonna pay for all this thing and pay for the innovation on this thing? So it's always a bit difficult to scale all this kind of private server. And I think that what blockchain can really bring is to really let the gamer have more says and influence in the direction, and also more ownership in the game that they invested so much of their time and resources into it. So I think that this is a very profound changes. Obviously, that right now you have a big technology constraint, so it's a bit hard to build a AAA game into like on top of blockchain. But I believe that this will change in the future, and definitely there's a bright future ahead for this.
Yeah, I think so too. I'm excited to see some people. Since we've been working with Serum and Solana, I want to see some people start building there and see how, because like what I think would be like where the real end goal here is that basically you have blockchain agnostic games which are interoperable with each other, and it can run depending on the one you want to use, the Web3 wallet you want to use, and you can move your assets around the different chains. And then it could be something really cool where you get to the point where some third party can make a business where you can incorporate the characters from the other games and just have them poured into this other universe and be able to do things there as well. So I'm excited to see where it goes.
Exactly. I was talking about this just like the whole Marvel comics, or it's a one multiverse, right? Obviously, and different authors come up with their own slightly different interpretation as well. But generally, they work on the same like a world in a sense. That if you watch read comic, you will know that. So I think one thing that is very exciting for the game in future is, let's say that someone can create an initial idea, and other producer or creator can build on top of this and create another like a multiverse kind of idea, but using the same story backline and create a different kind of game. And you can kind of grow one very big multiverse of game that based on one same origin, but have different branches and different focus. One can be an RPG game, one can be like a fighting game, and you just have and everyone can build on a different story, but on the same world. Mm-hmm. And like how the Marvel Cinematic Universe work, but although it's all run by Marvel, but you can have the same kind of concept running in a game in future where everything is interoperable.
Yeah, I mean, you see that in some really good fantasy worlds, like the Forgotten Realms and stuff, where you have one world and many different authors write on it. So I'm excited to see that happen in tech too. Yeah. Going back a little bit more to Defiance, I want to ask you if you could walk me through your guys' process when a project comes across your desk.
I think that we usually just it depends on the stage of maturity of the project. I think so. For secondary opportunity, we do active screening and also research ourselves, because they don't really need to raise funds, so they will just they won't really approach the fund proactively usually. I think so usually we look at I think the most important is like the tractions. We look at let's say it's a DEX, what's their volume like, and what's their user. So I think it's the best I illustrate this using a example. So I think one example of the secondary market opportunity that it has done very well for us recently is a Sushi Swap. So I think Sushi Swap has garnered a lot of bad press, and obviously there's a lot of stigma and history behind it. Like the founder kind of have like a soft exit scam and return the money afterwards. So it caused a big hoo-ha. And obviously it's like a kind of like a little bit of hostile fog against Uniswap. So people kind of leave a little bit of bad taste in a lot of people's mouth. But I think what we have seen in around late October and November is, despite all the DeFi winters, mini winter, and all the incidents, it just keep on building. And also that they still put on a very impressive number. Like SushiSwap was consistently the top 5 DEX by volume, and also that they already have like a value accrual in place where all the SushiSwap token staker will get like a 5 basis point of the trading fee. So I think that this like give you a base layer of like a base value. Like because if this go low enough, you just buy the sushi and stick it, and you get like your staking reward back in like 1 or 2 year. And I think this is like for a growth stage DeFi protocol, it's definitely a very good investment opportunity you can take. So we talked to the core contributor behind them, and just to do more research, we found that they are not like other community folk. They just like one-off and just wanting to get the money and run, but they actually keep on building on top of it and have a lot of innovative product solution coming out. So that's why we make an investment into SushiSwap early in November, and just keep watching it play out to our thesis follow up on. So I think this is some of the example of a secondary market opportunity. For primary market opportunity, I think it's very similar to a lot of what other venture investors will look at. We look at the team. The team, I think, is probably one of the most important part of any DeFi protocol. We look at the product design. Does it make sense? Is it something that potentially game changing? We also look at the token economic design as well. I think that for a lot of the DeFi protocol, I think that the token is pretty important to get the token economic right from the beginning, because if you can get the initial design right, you get off to a very good start. You bootstrap an initial TVL, I think, and a part of it tend to be quite sticky. I think that what we have seen is like, for example, for Harvest, although eventual exploit is still sitting at like a few $100 million of a total value lock, which is I think pretty impressive. Like you have a DeFi protocol that was exploited before, and people still put a huge sum of money into it. So I think that if you get the initial design right, you get early traction, it just makes the whole journey much easier afterwards. And I think there's a few main factors we look at.
Yeah, that makes sense. And I actually agree with you on the whole sushi thing. Like they're builders. It seems like they put their head down and they build and they do things that people need. And I'm actually very curious, if the whole Chef Nomi thing hadn't happened, they would have taken over the world. Like they were on a trajectory right there. It's kind of crazy. Like they were on a trajectory to just become the blue chip of blue chips in DeFi. And then even though everything went to shit, it crashed to 40 cents, whatever, this resurgence it's had lately, and as well as Harvest and these projects, just to me speak of a resilience within the DeFi space, and that we are building in the right space.
Yeah, and I think that it's just I don't know how to like account for this, but SushiSwap is one of the very few community folk that have garnered the mind share of a contributor and builders, so that you actually can see that a few like a very talented builder are actually contributing to SushiSwap. Like, and actually this is something that's not easy, because if you're like a talented developer or engineer, like it's actually your resources and time is very precious. Like usually that you will not just like contribute it to any community project easily, because it takes up a lot of your time. But I mean, SushiSwap has managed to make this happen and attracted a very talented group of builders to build on top of them.
Yeah, I'm excited to see where all these projects keep going forward. And I want to get your views a little bit on the future. And I know it's always hard to say, but just a general sense that you have of where we are right now. And this can go kind of to the macro Bitcoin as well, or just stick to DeFi, but I'd love to hear a bit of what you think the next phases are that are coming?
So I think that I think probably we can talk about macro. I'm definitely probably not the best guy to talk to, but I think that what we have seen coming from Singapore. So I think the largest bank of Singapore is just launched a crypto exchange. They allow they will start from an institutional and accredited investor, but essentially they will be allowed to buy like a Bitcoin, Ether, Bitcoin Cash, like directly through the exchange launched by the banks. I think this gives a lot of assurance. So I think that we have been talking about the institutional adoption meme for the last 2 years, and it's finally coming. It's really coming this time. And so I think this is just we will see a big convergence of all this institutional adoption. I think it's unstoppable at this point because we have seen very legit like institution taking the plunge already, like insurance company, publicly listed company, and a lot of family office, and also some of the bigger asset management firm. So I think this trend is not stoppable because we're also in a very, in the macro sphere, they talk about the Great Reset. I mean, due to the COVID-19 and also a lot of political changes, I think that, and the whole world just can't get into a situation that there's no other way out except by engaging in more monetary stimulus. All the central bank in the world is just not gonna raise the interest rate significantly because that will make the debt burden unsustainable. And also, there's no other way out. I mean, you have to keep the interest rate low because a lot of business will go bankrupt otherwise, and this will cause more unemployment. So I think that the inflation might not show up in like the normal goods, but it will definitely show up in the asset. Like that's why you see stock market at all-time high. You see a lot of the property is like start to climb to a very high value as well. And a lot of this like a high value collectible is also trading at a very high value. Like I'm a bit of the watch person. Like all these like famous watches that are all sold out in the retail. Like you just can't get it anymore. So I think that you see a very big asset inflation, but not in the normal goods. So I think that this whole trend just lead to like a big monetary stimulus, and the concept of the digital native currency is definitely going to take hold, and more people believe in it as well. So I think that this unstoppable trend is just going to usher in a more crypto adoption. And a news just coming today is like a Pornhub. It just announced that they're just going to exclusively accept crypto as a payment because Visa and MasterCard just stopped processing payment for them. So I think that this is definitely a very big push in adoption as well. So, and I think that a lot of this will inevitably flow down to DeFi. I mean, they obviously start from like learning what Bitcoin and Ethereum is about and start to use them. But I think that's the gateway to them. Once they discover Bitcoin and Ether, they will probably try to see that, okay, what can I use with my Bitcoin Ethereum? And then they'll heard from some friends or saw it from the internet, oh, I can actually generate like a 5 to 10% yield on my Bitcoin or Ethereum or even the stable coins. And this compared to the yield offered by the traditional finance, which is like 0 to 0.5%. And this will definitely make some of the people take the plunge. And I think that this will just grow from there slowly. And on the DeFi space, I think that right now, I think that after a lot of the big idea has been explored and implemented, we are kind of a little bit in the infrastructure improvement phase, where you guys are building on Serum, and a lot of other DeFi team are also trying to solve the scalability issue by either layer 2 or a cross-chain deployment. I think that this will get solved in the next probably 6 to 12 months, and then we will see a lot more new use cases being unlocked as well for DeFi.
Yeah, that's a great analysis. Thank you for sharing. It's exciting times ahead in that aspect. And then, Arthur, I have one last question for you. And it would be, you're looking at a lot of the problems in the space. I'd say you are in a pretty unique position that you get to see where they are. And I know a lot of builders listen to this podcast, so I'd love to know if you could share a few of the problems that you see that may be worthwhile for someone to take on.
That's a good question.
And there's no rush. You can think on this. We can edit out the section and too.
I see. Cool. Yeah. Actually, I think a lot of the issues are already being tackled. I think that there's one issue facing the DeFi is it's very hard to separate out the custody of the asset and with the operation of the asset. So let's say you are doing yield farming on DeFi. So previously, is most of them only integrated the MetaMask or the hardware wallet. So traditionally, how the fund works is a trader can trade, but they have no ownership of the asset and they can't transfer the asset out. That's why the sub account in the central exchange exists, and it's quite difficult to implement this in DeFi. But it's actually getting solved right now. Like Fireblock and Curve, they are all coming out with a DeFi custody solution where you can set like a different kind of level access and control for the trader executing this kind of trade as well. So I think this is actually one of the biggest roadblock for DeFi, that you can't separate out the custody of the asset together with the trading operation of the asset when it comes to DeFi. But this is getting solved soon. So I think this is one of the biggest issue for DeFi previously. I think another few biggest issue I think for DeFi is regarding under collateralized borrowing. I think this is really will unlock more capital efficiency. But there's already a few teams working on this as well. Like TrueFi is working on it. I think that Alameda is, I think, the first borrower of TrueFi. And there's also other solution working on as well. I think we haven't really seen it taking off in a big way, but I do believe that there's a potential for this to grow very big from the future as well. So I think this is one issue definitely worth tackling. Yep. I think this is two major one, under collateralized borrowing, and also the institutional tools to engage with DeFi. Yep.
Mm-hmm. Yeah, those two are great. Well, Arthur, thank you so much for your time, man. I appreciate you coming on.
Yep, definitely. Thanks for having me as well.